Hello everyone and welcome to the MetaTrader program webinar. Today we will be entering on our MT4 web and we will be analyzing on how to use charts, how to open positions, how to close positions, how to put pending orders, etc. Now first of all, to log into the MT4 web platform, all you need to do is to click on login to MT4 web right below make a deposit. So once we click on it, it'll lead us to a new page. Now we see B4X Web MT4 login. We need to put our username, and password. And then we click on login. Once we log in, you will be seeing the full MetaTrader platform on the web with your account equity, the balance, everything else. Now, first of all, we will be analyzing what is up here. Deposit, classic, open profit. Then we will start from the left side of the middle page of the platform to the right side, and then we will also look at the bottom of the platform as well. Now, first of all, here we have deposit. Once we click on deposit, it gives you a deposit page so that you can deposit any money that you prefer. Alright, whichever, if it's with a credit, debit card. We also have here the promotion code. You can deposit through Envoy, Cashew, Money Bookers, and bank transfer. Now, let's go back to our platform. Next to it, you will see that we have two views of the MetaTrader platform. We have the classic view and we have the simple view. Now, I would prefer using the classic view so that we have everything in front of us. But if you prefer using the simple view, that's fine by me, that's fine by yourself, and you can start trading. Now let's look at the classic view. Now on the classic view, on the top right of the classic view, we have the open profit and loss. We also have the balance, the amount that we have deposited, the equity, which is with the leverage. I will be explaining that later on. Margin level, alright, I will also be explaining that. And the credit. The credit is with the bonus that is provided. As you can see here. Now, again, top of the platform we have deposit, which leads us to the deposit page. Next to it we have classic view and simple view. Like I said before, I want to use classic view. Here we have the profit and loss that we're making, the balance, which is the amount that we have deposited, the equity, which is the leverage. I will explain the leverage later on, and the margin level. I will be explaining that first of all. Now, first of all, let's talk about leverage. What exactly is leverage? Leverage gives you the opportunity of trading with a much higher amount in the market. So let's say we open an account of $100, $200, up to $1,000, or any amount that you're depositing. The company provides you with a leverage. It multiplies the amount of money by up until 200 times the amount that you have deposited. Now, why are you offered the leverage? It's very simple. Now, let's take, for example, accounts that have only $100. If we open an account, if we open a trade on $100, it won't take any effect to the market. Since the market is very volatile, if it drops down by a very small percentage, you can lose all your money. That's why we multiply that amount of money up until 200 times. So that when you open a position, you will be opening a higher position. And you will take effect to the market. Now this is about leverage. Secondly, we have margin level. Now what exactly is margin level? Margin level calculates the chances of you either making profit or losing money. Now, the main goal of margin level is for you to have a margin level always higher than 1. Whenever you see that your margin level is below 1, it means that your risks of losing money are very high. And you need to avoid that. Now, what are the reasons that your margin level is below 1? I will state 2 reasons, and I will state 2 solutions to every reason why your margin level is below 1. Reason number 1. Your margin level is below 1 whenever you have, for example, a $100 account, alright, that you have deposited, and you're opening more than 2 positions. Alright? When you're opening 3, 4, 5, 10 positions, you're putting a lot of pressure to your account. And your margin level will be very low. So your margin level will obviously be below 1. And you need to avoid that. Now, the solution to the margin level is very simple. Open a maximum of 2 positions whenever you have an amount of money of $100. Now, if you want to open more than 2 positions, all you need to do is to either add money to your account or open very small positions. I would suggest, even if you're opening small positions, you need to open a maximum of 2 positions. Now, this is reason number 1, and these are the 2 solutions. Reason number 2. Your margin level could be below 1 simply because when you open a position, you're opening a high position, a position of more than $10,000. Remember, I'm still taking the example of the $100 deposit that you made. Even though you have the leverage, opening a position at $10,000 on a $100 account that you deposited gives a lot of pressure to your account, and you need to avoid that. How do you avoid that? And I'm stating the 2 solutions. Number 1, you open very low positions and a minimum of 2 positions, like I said before. And solution number 2 is the same solution as before. Either add money to your account so that your leverage will be stronger, and you can open not only more than 2 positions, but you can open higher positions. Now, this is about margin and leverage. Let's go to the second section of the platform, which is on the left side. On the left side, you will see market rates. Here you will see instrument, bid, ask. Bid and ask is basically buy or sell. Now the instrument is every symbol. Alright, Euro Canadian, Australian dollar, Swiss franc. You can go on gold, silver, crude oil, etc. These are instruments. Alright. Now, you have the bid and ask, which is the buy and sell. I will explain that on our third section. On the left side of the instruments, you can click on the small star just to make it as your favorite. And if you need more information about a specific instrument, all you need to do is to point out on the small that relates to the instrument that you chose. And here you will have the full information of every instrument. Now, you can filter instruments by your favorites, like I said before, by clicking on the star. Next, you have CFDs. Now, what exactly are CFDs? CFDs are future contracts, stock contracts, stocks that have an expiration date. All right. Now, on CFDs here, you need to check on the information, the expiration date of every instrument. All right. Some of them are Dow Jones with an expiration, as you can see here. Dow Jones, September, expiration 21/9. Alright, these are basically CFDs, future contracts. Now, moving forward, next you have Forex, which is all the currencies. Alright, now, next to market rates, you have instruments trend. Now, what are exactly instruments trend? It is a section of the platform that tells you which instrument is the most popular. For example, gold is the most popular at the moment. The second most popular at the moment is the Euro USD. So that you know exactly on which is best to start trading, which is the least best, which brings you more profit, which gives you an opportunity of trading more professionally. Next to it, you will also have the trend, which is 40% of buying and 54% of selling on the gold. So we see that the gold is getting a bit weaker. So whenever we see that the gold is any instrument is getting weaker, we need to sell the position. Now here you have, this is basically the grid. Next to it you have the charts. Now this is a chart of the popularity of every instrument. Alright, you can look at it just to make sure. It's not very important, but it helps a lot. Alright, this is our second section of the platform. Now let's go to the third section where we open positions. Now, first of all, here you have the instrument. You choose the instrument. So let's take, for example, Euro USD. So I'm choosing my instrument. And exactly how can I understand Euro USD? So let me explain. Whenever you're opening any positions about any instrument, for example, Euro USD, it means that the euro is the dominator against the USD. If you're buying euro against the USD. And if you're selling euro against the USD. Whenever you see the euro USD is getting stronger, it means that the euro is getting stronger, so you're buying euro and you're selling in US dollars, which means that you're making profit. If the euro is going down, it means that you're selling euro and you're buying US dollars automatically, so that you can make profit. Now, here you have the amount, which is in lots. Now, what exactly are lots? I'll give you an example. 0.01 lot means $1,000. Remember, these are not real $1,000. These are the $1,000 applied to the leverage that is provided to you. If you change it to 2, it's $2,000, $3,000, $4,000, etc., etc. Now, we have SL and TP. What exactly are SL and TP? SL means stop loss, and TP means take profit. Now, what is exactly stop loss? Stop loss gives you an advantage of putting a certain rate on which you are willing to lose a maximum amount of money. For example, if I open a position of $1,000 and I'm putting a rate where I can see next to it that I'm putting a stop loss right now, so if by any chance that the market is going against me, that it's going down, when I open the position and I'm losing money, I'm putting a rate on which if I'm losing that maximum amount that I put in, my position will be closed automatically. For example, if I open a position of $1,000, and if the market is going against me and I'm losing up until $100, let's say, I'm putting the amount, the rate on the amount on which my position will be closed at a maximum of minus $100, so that I do not lose any more money. Take profit is basically the same thing, only on the profit view. If I'm making profit, I'm putting on a rate on which I want to close my position at a certain amount of profit that I made. So, let's say I'm making up until a maximum, I open a position, for example, of $1,000, and I'm making up until $300 of profit. If I reach a $350 of profit, depending on the rate that I put in, my position will be closed automatically. Now, why do we need to put the take profit? It's very simple. And remember, this is also a strategy that I'm giving you. Whenever we see that the market is going up or even down, we need to put a stop loss take profit. Why? Since market is very volatile, most of the time we see that if market, for example, is going up, so you're making profit, you're making more profit, you're making tons of profit, but there will be on a certain time that the market will go back down. If market is going stronger and you're making profit, put a stop loss so that before market goes down, your position will be closed and the profit that you made will be added to your account immediately, automatically. Same thing for the stop loss. Now, our stop loss always needs to be on a lower rate than you can see here. Alright, so let's put a rate 2665. Alright, so I'm putting on a rate which is lower than these rates. This is for the stop loss. For the take profit, I need to put on a rate which is higher than these rates. So we have 1.2681. I will be putting 1.2695. Now, what exactly I want to do? Let's say I'm just giving an example. I'm just opening any position. I don't know what to do. I'm just taking a shot. I'm buying the position. So here we have an invalid take profit. We need to make sure that our take profit is on the limit range. Alright, so let's check it out if I can have a higher take profit. Alright, so I put on a higher take profit and I click on buy, and you have the instrument, the desired price, the action which is buy, the amount which is 0.04 lots, so basically $1,000, my take profit and my stop loss, and order opened successfully. Your order has been executed at price 1.2683. I click on OK, and I can see my position right here on the bottom of the platform. Now this is when we buy or when we sell, when we basically open a position. Next to it, we will have pending order. Now what exactly are pending orders? Pending orders gives you the advantage of opening a position at a certain time that you choose. Alright, so we have instrument here. Let's take again the Euro USD or the USD Canadian dollar. The amount which is in lots, our stop loss and take profit, our type. Now let's explain exactly what is our type. We have type, which is buy limit, sell limit, buy stop, and sell stop. What exactly are the four limits? Four types. Now, whenever we see that we're buying limit, so we're opening a position on buy, and we're putting a limit that is lower than the rate that the market is giving me to buy. When you put in a sell limit, we sell also at a lower rate that the market is giving me to sell. When we buy stop, we're putting a stop. We're opening a position on buy which is higher than the amount that the market is giving me to buy. And when we sell at a higher price than the market is giving me to sell also. Now, we have at price. All right, we choose the price on what rate we want the position to be open, and expiry, the expiration date on which the position will be opened and will be closed. And then we click on place. Next to pending orders, by the way, for more information about pending orders, feel free to ask myself on my email or your financial advisor so that he can explain and give you advice on which pending order you should take. Next to pending orders, you have the cubes. Now, cubes are basically the same thing. Alright, you can choose your symbol, your instrument. Here you have the sell rate and the buy rate, and here you have the lots. Now, you can take off any cubes. Remember, this here is the time that is given of every single instrument. You can change instruments, or you can add instrument. Now, here we have enable one-click trading. Instead of clicking on what we did before, we had a confirmation. We only need to click once, and the position is automatically open right below. Now, this is about our third section. Let's go over the fourth section. Fourth section is the charts. Now, the charts allow you to analyze every instrument in the market so that you can know exactly what to do later on. Alright? So you can use this chart. I would prefer having a new window about the charts. As you can see, I just opened a new window. Alright, let's analyze the chart right here. Here we understand that this is the Euro USD. I can change to any instrument that I prefer. Here I have on a rate of a day, 4 hours, 1 hour, alright, 15 minutes, 5 minutes, etc. I would prefer using 1 hour. Alright, now you can choose sticks. Alright, you can choose your graph design, sticks, lines, and bars. I would prefer using sticks, stick handles. Here on these small boxes, you can have a 3D view. So once we click on it, this helps a lot. Basically, I like using the 3D view. Now, let's look at it. As I said before, when we see that the market is going down excessively, it is the chances of the market going back up are very high. So let's analyze it. Let's have a small analyze about the chart. We see that from this time to this time, the chart went down a lot, and what were we expecting is a very high volatility of the specific currency. So from here, oh, sorry, let's click on it. So from here to here, the market went up excessively. And from the downwards, it went down. Whenever you see that the market is getting stronger, whenever you see that the market is going up, what you need to do is you need to buy. And when you see that the market is going down, you need to sell. Alright? So this is about the current chart, the historical chart. Now we have the real-time chart. The real-time chart gives you the advantage of analyzing the chart tick by tick. So let's open a new window. Alright, this is calculated tick by tick. This is on the US dollar, Canadian dollar. Alright, so you can see exactly what's going on. There's a big difference between buy and sell. Sometimes you will see that the charts are getting closer. Sometimes you will see that the charts are getting have a big difference of distance between them. Alright, now we see that it is very volatile at the moment. Alright, so you can analyze it and follow it. Now this is about our fourth section. Now let's go on our last section of the platform. Here we have the position that we opened. Alright, open positions, ID, the position ID, the instrument, which is the Euro US dollar, actions, which is buy or sell, the amount, which is 0.04 lots, the open rate, which is 1.2683, the time that we open the position, our stop loss and take profit, the profit that we're making, the swap. What is exactly swap? Swap is the same thing as a rollover. What exactly is a swap? Rollover is when you open a position overnight or during the weekend, whenever it is very steady. Alright, so we have, let's say, on a position that we open overnight, we have a small commission that we normally pay. And here we have the close rate. Now, if, for example, I want to edit any stop loss or take profit, I can click on edit, and I can change my options here. And I can click on update. Let's cancel it. Or if I want to close the position, the only thing I need to do is close position. And my position is closed. At the moment I made 80 cents, so I'm doing pretty well. Now here we have my closed positions. Now this is the position that I'm the position that I made a lot of profit on. Alright, this one. Now here we have the Euro USD. These are all the positions that I opened for the last 7 days. We can also see the positions that I opened on from the last 30 days as well, 14 days or off. And here you have a list of your pending order that you can keep track on. So basically, this is everything you need to know about the MT4 platform. Thank you for joining. Now, for more questions, if you have any questions to ask, feel free to ask them. Thank you very much for attending the webinar.